This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/14/21, show number 297. Well, you can always count on Jay Powell to give you the news, the straight news, and nothing but the news. So help you God, right, Nick?
Oh, you could count on him for sure. He did it today. He basically came out and said, we are going to keep the pedal to the metal. And we're going to keep our asset purchasing going on. They're right now printing $120 billion a month. I shouldn't say they're printing. They're buying $120 billion a month in assets, treasuries, and mortgage-backed securities, sometimes some corporate debt. And he also restated the term from transitory to temporary. He said inflation is temporary. So basically, nothing has changed. The Fed is still the lead dance partner in the game of liquidity. And again, he gave the market the shot in the arm today.
So what's the difference between transitory and temporary inflation, Nick?
I had to look that up, and I don't think there is a difference. I think it's just the verbiage, but I don't think there's any difference one way or the other. And he's basically came out and said, auto prices are high, used car prices are high, and maybe down the road, that'll get corrected. He thinks that'll get corrected. So basically, he's just going with the same transitory story that they've been talking about for the last 6 to 8 months.
Well, I'll tell you why they changed it, and it's a really obvious reason. The fact of the matter is that everybody's been making fun of transitory, right? It's a ridiculous notion. It's like a little pregnant. Or I remember we had this messenger who worked for a company, Amadio, and Amadio came in. Well, he didn't come in one day to work, and he called in and he said, "I'm really sorry, I can't make it in. My brother got a little stabbed." Right? So this is the equivalent of being half pregnant or a little stabbed, right?
It is, and I have to say one thing though. Precious metals acted really, really, really well today off of the news, and that was nice to see.
Yeah, so acted well off the news, but is it time to celebrate? Break out the champagne bottle? Did we get to 1828?
No, we didn't do any of that. But it's just another day where you're sitting around 1828, and that's a big positive. You got to get a weekly close above that level though. And if you do that, that's a real big positive for the precious metals. Right now, they've really made a big comeback. Just think about it. If you look at gold prices, just going back to the 29th of June, they were down around 1750, and today they closed at around 1828. So all in all, big comeback, but you got to see where they finished the week.
Hey, well, Nick, we talked about this before. Over the past 3-4 years, and usually I am in Vancouver at the Sprott Conference, gold makes a move. In the summer, it's been doing it it didn't used to do it.
It has.
Right? But it's been doing it. So everyone has ignored seasonality here. I've never quite understood why it's making the move in the summer now. In addition to end of the year, late fourth quarter, early first quarter, no one's been able to explain that to me, but it's definitely become an identifiable pattern until it isn't anymore, right?
That's correct. And that has taken place the last few years. And, one thing I will say, I would think with all of this intervention going on by not only the Federal Reserve, also the ECB, Bank of Japan, and you could name a dozen more central banks out there that are doing the same thing, Bank of England and others. China and throw Australia in there and a bunch of others. I would think gold should be a lot higher. This looks like the cheapest asset in the world right now because of what's going on with all the money printing. And it doesn't look like it's going to stop anytime soon. And the only way it will stop is when the market says it's got to stop. And that hasn't happened yet. But,
yeah,
you know,
well, I saw a memorial the other day right by the Fed, and it was by a war memorial, and it was in honor of the fallen and slain bond vigilantes. May they rest in peace.
yeah, you know, you can make a case, though, that the Fed has killed the bond market. You could really make that case. I mean, even today we had yields down another 6 basis points on the 10-year U.S. Treasury. But who's the biggest buyer of bonds? It's the Federal Reserve with money out of thin air. I mean, I've just, you know, at some point, this absurd story will become a nightmare for markets, right? It's no longer going to be beneficial. We're just in the world of, you know, endless printing, money printing. I've never seen anything quite like it. It's never happened in my lifetime or anybody else's lifetime that is alive. And, you know, it's something that you have to concern yourself with. You know, these guys are really, you know, pushing it, in my opinion, to the brink here.
Hey, well, one day your grandchild will say to you, Papa, what's a market? And then you'll be reminiscing, well, once upon a time, buyers and sellers of securities got together and they sold and bought and bought and sold, and they established prices. And she'll look at you like you're from another planet, Nick.
You know what? You may be correct. I have to say, because this world is upside down and we're seeing things that I've never seen before, not only in the financial markets, but just in social society. And, you know, when you look at things like this, it definitely has you on your toes.
Hey, one final thing, are cryptocurrencies, where are they at now?
So the cryptocurrencies today, they actually were positive. All in all, when it was all said and done, it wasn't a big up day by any stretch, but I believe that Bitcoin finished around 32,700. It was up about 1.3%. But to put that in perspective, it is trading sideways, and the pattern is now more and more bearish. So I'd be very, very careful here with the cryptocurrency, especially Bitcoin.
Yeah, well, yeah, it's going to be interesting because, like we've said many times, they kind of trade like tech stocks did during the .com. Doesn't matter what you do, if you have a business model or anything, as long as you got klepto in your name, then you're golden. Well, in any event, if you want to find out how Nick does it, how he calls the markets time and time again, how he's been doing it for decades, just visit inthemoneystocks.com. Check out the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz, and send your emails. I swear we're going to get to them. I'm in the midst of a move right now. The studio's moving tomorrow, and I will get to it. That is my solemn promise to you. We got 40, 50 emails and comments from YouTube that we need to address, but I'll kind of break them down into the few themes that they run. And Nick, we will catch up with you on Friday on Options X. Let's see what happens.
Sounds good.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.